Welcome to this week's video where I discuss what I believe is important for individual investors to consider over the next 5 to 10 business days. We're going to touch upon interest rates. Interest rates have been moving higher over the last few weeks and how that affects the market. We're going to talk about portfolio construction, what individual investors should be thinking when they're building their portfolios today. And lastly, the dreaded L word, lockdowns. A lot of jurisdictions considering locking down again. How will that affect individual investors' decisions, and how will that affect the stock market? Interest rates. We've all seen interest rates move significantly higher over the past, let's call it 2 to 4 weeks. We've seen the 10-year government bond rate, which I've discussed in the past, move a lot higher. In the US, somewhere between 1.6 and 1.7%. And here in Canada, we're somewhere around 1.5 and 1.6%. I believe the quick movement of these higher rates has definitely negatively affected the stock market. Going forward, we're hearing about central banks, the Federal Reserve, Bank of Canada, talking about taking away a bit of the candy that it's given the stock market over the past year to help it, to grease the wheels of the economy and of the stock market. Going forward, I think this could affect the markets tremendously. Whenever central banks talk about tapering or taking back some of the stimulus, that usually has a bit of an impact on the markets, a bit of a negative impact on the markets. So I think individual investors going forward need to listen very closely to what central banks are saying and prepare for more volatile or choppier markets going forward. My belief is that we probably won't hear much until maybe third quarter of this year, but over the coming few months, we may hear a little bit of hints here and there about what they plan on doing towards the end of this year. Building portfolios today, in my opinion, has become a little bit more difficult. I've always said you want to find the best quality investments at the best prices, and if they can pay you a dividend, well, that's just gravy on top. But right now, what we're seeing is these good quality investments that everybody has seemed to pile into over the last 6 months, they're becoming a little bit, at least fairly priced, if not overvalued at this point in time. And so what I've been seeing out there right now is portfolios having a little bit more cash in their accounts. It's interesting. It's not something I tend to do consciously, not invest money or keep money in cash on purpose. But as you go along and start to see these investments becoming a little bit more expensive, not as many good quality names to buy that are cheap, you tend to build up some cash. I'm here to tell you today, there's nothing wrong with that. Now, I'm not trying to tell you to leave cash outside the market or cash not invested at this point in time because I'm trying to time markets. What I'm saying is having 5, maybe as much as 7 or 8% sitting in cash at this point is okay. It's normal to have cash buildups when markets are fairly or a little bit overpriced. And so when you're building a portfolio, take your time. Don't force things. Don't chase investments just because you have cash sitting on the sidelines. If you do have some cash there, keep it there, ready for when perhaps there's a pullback. We know markets don't go straight up. We know there will be pullbacks at some point, and that cash or dry powder is there ready to use to act when there's a good quality investment available. Over the last few weeks, we've definitely seen case numbers of COVID rise, both here in Canada, in the United States recently, definitely over in Europe. And we've again heard the dreaded L word, lockdown. A lot of jurisdictions are considering tighter restrictions or even lockdowns. For the stock market, obviously, locking down or more restrictions would be a negative. We would see the market pull back. And over this past week, we've definitely seen the market sort of soften every time someone in Europe talked about perhaps more restrictive measures to be put in place. We're also hearing perhaps some people calling for those restrictive measures here in Canada. And in some cases in the United States, even though they're a little further ahead with their reopenings, we've heard that their case numbers have popped up, various places around the country. If we do see a pullback due to these lockdowns, I believe that would be just temporary. And in my opinion, a great opportunity to buy. We always talk about buying on the dips or buying when the market pulls back. This, in my opinion, would be a temporary pullback. If the market was silly enough to sell off due to restrictive measures, that would be, in my opinion, a great opportunity to buy into this market again. And going forward, I think you could buy some really good investments on the cheap if we were to see a pullback for those reasons.